Dalal Street ended a volatile Friday in the green. The Sensex and the Nifty ended the week with gains of over 1%. 39 out of 50 Nifty stocks ended in the green as bulls continue to reclaim lost ground. Hello and welcome to a brand new edition of the Editor's Roundtable. And on today's episode, we put the spotlight on rail PSUs, new age companies, and why new economy stocks are seeing a complete collapse. I'm Sonia Shenoy, and with me, Anuj Singhal, Nigel D'Souza, and Nimesh Shah. Folks, it's been a crazy week, right? A week where we had a lot of holidays. So we celebrated Diwali, one of those weeks you rarely get, right, in the year. But apart from that, the bulls have had their firm grip on this market. And one thing is for sure, that some of these crucial levels, like say the 50-day moving average, is something that the market is holding on to very tightly.
Yes, and Sonia, you were not there 2 weeks back. I was making this point that whenever you have this kind of FI shorting, and retail long, it's the retail which actually trumps over FIIs, and we've had a 1,000-point Nifty rally since that point. I think 16,800 to 17,800, and that's why I didn't like the fact that this time we're starting with FIs actually on the long side and also buying in the cash market, because actually if we keep calling FI money as the smart money, but the recent evidence, just the recent evidence of last 3 years is that this particular FI money is actually dumb money. Because, it's really comes in when the market's near its top and it's actually exiting when the market's at the bottom. So I think that's really been, for me, the fascinating bit that the Indian domestic retail investor, of course, retail also includes HNI, is really making himself count and is really, beating FIs, because that gives you, a nice feeling about your own market. Our market clearly right now is showing two factors. It's a combination of democracy plus demography. I think for a lot of investors, this is the combination that's trumping over everything else.
Yeah. So, Sonia, you rightly pointed out that we've seen a 1,000-point rally in the October series. But, towards the fag end of the series, the market has become very narrower. Yeah. We are seeing very selective stocks doing well. So, and that could be the trend in the November series. While technically we may see a breakout, but again, the overall feedback is look out for individual outperformance, because you might not get a big move in the Nifty and in the Bank Nifty, but there are individual stocks which may do well. So I guess that's what the key would be. A lot of individual stocks may do well, and not the overall markets may do well. So that's something to watch out for. It's getting narrower and narrower. So that's a bit of a worry as well, to a larger extent, that only the smarter guys will be able to make money. It's not going to be easy money for sure. November series may not be a series where easily anybody could make money. Even that was the case with the October series. The series may look good end to end, 1,000 points or a 1,200-point rally, but I don't think many traders have made money in this October series, because it was so volatile. Every second day, third day, you'll see a 400-point, 300-point gap down or a gap up. It's not very easy to make money in such volatile markets.
It's not easy to make money anyway, Nimesh, in life, right?
Of course.
Nothing comes easy, but I take your point. I mean, I think one thing that stood out also this time around was the fact that earnings were good, whether it's from banks, whether it's from automakers like Maruti, whether it is, IT guys, a lot of good IT earnings, a lot of mid-cap earnings. So that is generally the fundamental basis of a bull market rally, right, if you want to call it. And in that context, we're very close to 52-week highs. So it's just a matter of time before we get there.
Two things, since you mentioned, I'll mention both of them. I think Maruti's earnings and its reaction told you something.
Yes.
Maruti went into earnings almost very close to 52-week high. Any other day, normally, regardless of what kind of number it comes out with, it would have seen a decline. And it's not as if the Maruti numbers beat expectations by a lot. They were just inline numbers. Not even a beat in the numbers, just inline numbers. But the very fact that, the commodity costs are down, and now, you can have some visibility. I think this is what got the market excited, that is this 9.3% capable of going to 12 or 13%? What kind of move will that have? And just one last point about the market. It's almost every day the market is showing a 3 p.m. rally. 3 to 3:30 it rallies, because it's sort of predicting a gap up next morning. Next morning you have a gap up, and the market cools down through the day, does nothing through the day, and then rinse and repeat at 3 p.m. once again a pop.
Okay, but Nimesh, you want to quickly tell us what the dealing rooms have spoken about today?
So, Sonia, as I said earlier as well, for the overall feedback for the October series of for the current market environment is, from a trader's point of view, it's not an easy market to trade and make money. That's the given. Though we had a 200-point rally on the Nifty, but it was not an easy market to trade. So that's something to watch out. I guess, everybody's now talking or anticipating a breakout on the Nifty, because we're pretty much close to that 17,800 crucial level. So will November be a series where we have breakout? I think that's something to watch out for. And for that, I guess there are a lot of macro events and micro events to watch out for. But before that, look at the positioning point of view. India has been a rank outperformer for this year. That's everybody knows it, right? In dollar terms or even in Indian currency terms, we have outperformed all other Asian markets as well as the global markets. What I want to put out is, typically towards the year end, in the last 2 months, we've seen historically there has been a reversal of trade in the stocks. So the outperformed stocks tend to underperform, or there is a bit of profit booking and money shifts to the underperformers. Whether this will happen at a country level or at an index level, I think that's something a lot of people have been talking about. India has been a best performing market. Can we see a bit of a profit booking and money shift to the other underperforming markets across Asia, or for that matter, the global markets as well? So that's something to watch out for in the November series. As I pointed out, some big macro events to watch out for. You also pointed out, there are a lot of geopolitical events to watch out for. The Fed meet. There is a midterm election in US. That's something that will have a big impact on the IT names. And also from a liquidity point of view, there is this MSCI rebalancing in the middle of this November month. So that's something to watch out purely from a liquidity point of view. I'll just highlight some of the micro events to watch out for, because that might have an impact on some individual sectors and stocks. The gas price, formula can come in the November month. So that's something which has been anticipated, and that can have an impact on IGL, MGL, Gujarat Gas. So those are things to watch out. Real auto sales will come out. The festive season sales will be very important, not only for autos, but for the other sectors like real estate as well. So I guess those are the things to watch out in the November series.
Okay, and we were also talking about strong earnings post-market hours on Friday. You had good earnings from Dr. Reddy's as well. Very good margins, 30% plus, and beating street estimates. So we'll react to that on Monday. But Nigel is going to talk about the big story of the week, which was the new age companies which listed on the bourses will see their lock-in period end in November, and there could be a lot of supply that kicks in. Nigel, over to you.
Well, I'll just hop across to the big wall, to address this. As the header suggests, we're talking about November rain. No, we're not talking about the Guns N' Roses song. It's basically, the fear is there's going to be fresh supply that comes into the market. That's because 1 lakh crore worth of shares, they get unlocked, which were otherwise locked in itself. Basically, there are various new age companies in there that had pre-IPO investors, and that period will expire. The dates are up for you on the screen as well. Some part of November is when the effective lock-in dates do expire, and post that they can sell. And you'll say, well, but all these stocks, they're not given any returns. The point is that these are pre-IPO investors. So they are sitting in big returns, some of them at least. Case in point being a Nykaa. On Nykaa itself, there have been some of those pre-IPO investors that have got shares at around 200 rupees. So they are still making 5 times of what they already put in. So there'll be that temptation to maybe book out, maybe reallocate that money as well. So we'll have to keep an eye out on some of these counters in there. Let's break it up for you then. The total quantum I said is 1 lakh crore, right? So we'll break it up in 2 pieces. One is Nykaa. They have close to 32,000 crores of supply that could potentially come in. But half of that is the promoter entity. So that's unlikely to come in. At least that's the way the street wants to read it. While the non-promoter entity, there's a big number out there, close to around 16,000 crores. Fino Payments, small number in there, but the promoter entity, only their shares are getting unlocked. But take a look at the last 3. Paytm, Delivery, as well as PB Fintech. There could be massive supply that's coming in from there. So the total promoter number of shares that are getting unlocked, the value is 16,000 crores. Put that together with the 85,000 crores of non-promoter entity, and you get that big number of around 1 lakh crore. Remember, this happened earlier this year as well, when Zomato was under pressure, went down to around 43 rupees per share, when Uber and Tiger Global, well, they were selling out. But at the same time, they reported strong numbers. And it seems some investors, they latched onto that, and all that supply got taken up between that 40 to around 50 rupees odd, and that's why we saw a bit of a bounce. Now, this time around, Nykaa, well, their lock-in is expiring, and that's coinciding with their results. So their results will be tracked in the first week of November, and then the lock-in as it expires. 2 factors can play out. One is the share prices could be under pressure because of possible supply that's coming in there. And if buyers were interested at some point of time, well, they'll be spoiled for choice because there's going to be plenty of supply. The big headline is November rain, 1 lakh crore worth of supply could potentially hit the market. 85,000 crores of that will be from non-promoter entities. Back to you guys.
Okay.
Very interesting point over there. I think on Zomato, while it was subject to all the memes and all, it's easy to forget that from 43, it gave you a very quick rally also to 65. This is so this is where I believe this this logic of time in the market is more important than timing the market. In some times, timing is all important. I think that will prove out in the case of Nykaa as well. I think Nykaa will give you a big trade. Whether you can catch it or not, it will depend on whether you have the risks risk-taking capacity at that point when the stock is collapsing.
Okay, that's interesting, right? To see how Nykaa's trajectory is, because there are plenty of things. I mean, there are a slew of resignations that have taken place at Nykaa. There's a big player coming in the form of Reliance's Tira as well from Jan onwards. So let's see. I mean, there's lots happening with that company. But there are a whole host of events to watch out for next week. So I'm tracking some of them. The big event from a global standpoint will definitely be the US Fed meeting. That happens on the 1st and 2nd of November. And in all likelihood, there will be a 75 basis points rate hike. At least that's what the market is expecting. So do keep that on your radar. The RBI has a rate setting panel meeting. That's an unscheduled meeting that takes place on the 3rd of November. And Lata has been telling us that there is no rate hike expected this time around, despite it being an unscheduled meeting. But we'll still track that very closely. Next week is a big week of earnings. You have SBI, Bharti, L&T, Tata Steel all reporting their numbers. And I'll track Bharti very closely purely because the stock has been at a record high ahead of its earnings. Telecom has been doing well. On Saturday, this week, actually, you have IOC, NTPC, and Monday onwards, as I said, Bharti, Tata Steel, and L&T. Tuesday, you have Sun Pharma, Tech Mahindra, Nykaa, and Lodha. Friday, 4th November, there's Titan, and Saturday, 5th November, there's SBI. Followed by which you have the auto stocks, as Nimesh was referring to. They come out with the auto sales on the 1st of November. And this time, festive season sales have been very strong, especially in passenger vehicles. So we're going to watch out for that as well. But let's do one thing. These are all the events to look out for. Let's talk about one particular theme. Now, during Diwali, we had a chance to catch up with market veteran Ramesh Damani earlier this week. And he is betting big on railway PSU. So we thought about taking this theme forward. First, let's listen into what he said, and then Nimesh will put that into perspective for us.
Railway PSUs, you look at the basket of railway PSUs, because these are the blunt instruments the government is going to use in order to express their capital expenditure over the next few years. So I think there's a great opportunity in those stocks. There are 4 or 5 listed. I'll name them, but I'm not recommending any of them. Railtel, RVNL, RITES, to name a few, IRFC, to name a few. I think if we just go and study those, I mean, you may not want to buy them, may want to buy them, that's a call. But I think as an analyst and as a value picker, you owe it to yourself to at least go through and study them.
So, you heard what Ramesh Damani said. These are not recommendations, but we're just trying to put out what are the rail PSUs available in the listed space, and how are they valued in terms of valuations as well. So I'll just look at the overall basket of the rail PSU stocks. There is IRCTC, there is IRFC, Railtel, RITES, RVNL, and IRCON, the 6 listed PSUs within the railway space. The entire PSU basket is available for a little over 1.15 lakh crore. That's the market cap of all the 6 listed PSUs put together within the rail basket. Now, let me first come to the first stock, which is IRCTC. Mostly everybody knows this company. It's a monopoly in the ticket booking, catering services, and the rail near services. It's the most expensive within the rail PSU stock, trading at 54 times FY23 estimated price to earnings. Since listing, the stock is up 11 times. That's the kind of move you've seen in IRCTC. Though this year is down 10%, it commands a market cap of close to 60,000 crores, and it's having a cash of close to around 400 crores. So that's IRCTC for you. Look at the next stock now. The next stock is IRFC. This is a dedicated market borrowing arm of Indian Railways. It's like an NBFC. It has an AUM of close to 4.3 lakh crore. Trading has just 0.7 times price to book with a book value of 31 rupees. And since listing, the stock is on 15%. If you look at this year, the stock is on 4%. The current market cap of IRFC is close to 28,000 crores. And even that is having a cash of close to 150 odd crores. So that's IRFC. Third stock, that is Railtel Corporation of India. This is among the largest neutral telecom infra provider in India. They have an exclusive rights of over 67,000 route kilometers for the railways. Now, if you look at the valuation, trading at 17 times price to earning. Since listing, the stock is up 20%, but this year, the stock is down 3.5%. So that's Railtel for you. Look at the next stock, which is, RVNL. Okay, RVNL, it's basically an infra project execution company. Again, a zero-debt company, undertakes all the projects in terms of financing and implementation of the infra projects within the railways. Trading at just 7 times price to earnings. Dividend yield of close to 7 to 8%. Since listing, the stock is up 2 times. This year, the stock is up 13%. What is interesting is it's commanding a market cap of little over 8,000 crores, but having a cash of close to 4,500 crores. So that's RVNL. Now, the next stock is RITES. Again, it's an engineering consultancy corporation for the railways, trading at 12 times price to earnings. Since listing, this stock is also up almost 2 times since listing. This year, the stock is up 45%. Again, commanding a market cap of 9,000 crores, cash-rich company having a cash of close to 800 crores. So that's right. Now look at Aircon. That's a construction of infrastructure. Again, it's trading at just 7 times 1 year forward earnings. Current order book of this company is close to 42,000 crores. And if you look at the market cap of this company, it's just close around 4,000 odd crores. Since listing, the stock is down 10 odd %. And again, having a cash of close to 1,200 crores. So all these 6 PSUs are sitting on good cash. So these are the 6 companies which are listed within the Rail PSU basket. The entire basket is available for just less than 1.15 lakh crores. So that's the number for you. No recommendations, as even Ramesh Zamani put it out. It's just the data and the valuations that I've put out within the rail basket. Over to you, Sonia.
Okay, looks like a railway station there, right? With all those, with all those station signs. Okay, thanks a lot for that, Nimesh. But this is really a space that's hotting up. So we'll do one thing. We'll take a quick break on that note. When we come back, Shivani Sirkar-Kurian of Kotak Mahindra AMC will be with us.
Rahul,